All right, guys, back to work tonight. Wednesday evening, it's January the 13th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time, it's great to have you with me tonight because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a fantastic video in store for you guys and gals tonight. S&P, of course, is all prepped up. Crude oil is ready, and we got the gold on our radar for tomorrow. Speaking of tomorrow, we're still dealing with some range-bound markets. We're buying low. We're selling high. I got some great setups just around the edges of those ranges we're tracking for tomorrow. Got some big potential pendulum swing targets. We talked about this earlier this week. We're looking for some nice big moves as we went into the end of the week this week. Got some big news tomorrow on the schedule. Hopefully that will get things moving for us nice and early. So got a great video in store for you guys and gals tonight. Charts are all ready. Before we jump in, though, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. You know, we publish this video newsletter every evening right around 7 o'clock Eastern time with my best trade ideas and my favorite setups for the following day. So make sure you subscribe to our channel. That way you don't miss tomorrow night's video newsletter. And as always, if you have any questions, don't be afraid to type those questions and drop them in the comment section below. I'll get them all answered as soon as possible. And you know, guys, I really appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it, I always appreciate you guys hitting that thumbs up button for me here on this YouTube video. So make sure you subscribe, drop those questions in the comment section below if you got them, and thumbs up if you guys enjoy the video that we produce here every evening on this video newsletter. But enough of the introduction. Time is ticking. Hope you guys had a fantastic Wednesday. Let's get ready for Thursday. Now, like I mentioned earlier, we have a lot of range-bound markets on the chart right now. We got that nice weekly range on the S&P. We got the weekly range on the crude oil. And, of course, we got the weekly range on the yellow metal, right? The gold futures. The plan tomorrow is all relatively similar. We had these big pops up today, and now we're coming back down into the range, right? So pop up, back down into the range. Pop up, back down into the range. So we have all of this momentum for the bears right now. We want to stay away from the middle of these ranges, but with all of that momentum right now, really the goal for tomorrow is going to be shorten the pops, right? So shorten those pops as they go higher, right? Shorten the pops. We got a bunch of levels I'm watching on that. And of course, if we don't get the pops, right, we've got the potential for that run lower, right, to complete those big pendulum swings. So we're looking for breakouts. We're looking for bull traps. So a lot of similarities tonight. There'll be some obviously key differences. You know, for example, we get some great examples of the two-try rule setting up here on the S&P. Got a really interesting channel to look for on the crude oil tomorrow. So a lot of interesting stuff I'm tracking for tomorrow. I know you're going to love, right, this video here tonight. Before we jump in, though, and get the setups planned for tomorrow, though, let's make sure we take a look at the calendar for Thursday morning's trading session. That way you guys know what to avoid and, you know, what time to be at your desk tomorrow. Tomorrow is one of the busier days of the week. You got Thursday and Friday are kind of the busiest news days of the week. Friday will probably be the busiest, but you know, Friday is the Friday ahead of the holiday weekend, right? We got MLK holiday on Monday. It's a bank holiday, so we know Friday could be a little bit low volume. We'll talk about that tomorrow night on tomorrow night's newsletter, though. Thursday tomorrow, though, right? Thursday's coming. We have, of course, the big jobless claims report at 8:30 Eastern time. That will hopefully get things really moving and shaking. Then later on in the morning, we're going to hear from Jerome Powell. He's going to be late morning, 12:30. Most likely at some point tomorrow between the jobless claims at 8:30 and Powell at 12:30, we're going to probably hear from the new president-elect Biden regarding his COVID plan. All we know right now is he plans to release all the vaccines, right, which seems logical. And it's going to be expensive. That's all we really know right now. So that will definitely be on our radar for tomorrow. Once we start getting a little bit of a whiff of when that number comes out tomorrow or when that announcement comes out, we'll obviously hone in on that time. We'll probably hear at some point early tomorrow what time, right, he'll be speaking or what time to be publishing that announcement on the interwebs, right, for all the trading traders to digest. So it'll probably be at some point right in between there. That is potentially one of the biggest market movers of the day tomorrow. Jobless claims, President-elect Biden's COVID plan, and of course we got Powell. I don't think Powell's going to move things around very much. Just so you know, the Fed has made it very clear they're going to prop this economy up with stimulus and low rates, and they're going to keep on firing the bazooka into the economy here. So I don't think the Powell speech later on in the afternoon. Remember, it's not the testimony tomorrow afternoon for Powell, right? This down here is not testimony. I think he's a keynote speaker at an event in I want to say in London tomorrow. So I don't expect that to be too big of a market mover, but I do expect the jobless claims report, and I do expect that COVID plan from President-elect Biden here in the U.S. to be a mover. I'm also, just so you know, I'm going to talk about this a little more here once we get there. I'm also watching rollover tomorrow and Friday on the crude oil. Usually, rollover is going to be around between the 15th and the 18th on oil. Tomorrow, of course, is only the 14th. But with the holiday weekend coming up on Monday, again, Monday's a holiday, we're definitely watching rollover here on crude oil. You'll notice here that right now the 221 contract has quite a bit more volume, about 150,000 contracts more, so about a 1/3 more volume. But you'll notice we're already seeing people migrate over to the 321 contract. The rule of thumb is pretty simple, right? Once that 321 contract has more total volume, we'll then switch it up and start trading the 321 contract. So we'll keep an eye on that for tomorrow. It may not be tomorrow. Tomorrow might be one of those days where we get 350 for the 221 and 350 for the 321s. We may share volume tomorrow. If that's the case, you can pick whichever contract month you want to be trading. You can't really mess that up, right? We're not talking about expiration. We're talking about rollover, right? When the volume gets higher on the CL0321. So be aware of that for tomorrow. Maybe on Friday. But again, you definitely want to be at your desk tomorrow, though, early, because you get the jobless claims report at 8:30. And then, of course, we'll be listening in to see when we hear more regarding that the COVID plan, right, from President-elect Biden here in the U.S. And we'll see if we get anything off that Jerome Powell speech. I doubt it. I wouldn't hold your breath there for that tomorrow. Now, don't forget, tomorrow morning we'll be in our trade room like we are every morning, 8 o'clock Eastern time. I would love to have you there right there with us. And we'll be trading markets like the S&P, the crude oil, and the gold. So let's put the plan together here for tomorrow's trading session. Charts are all ready, as you can see. Lots of ranges tonight. Why don't we take a look here at the S&P first? Now, we've been talking about this all week, right? We've got this trading range. Let me go forward a little bit here. There we go, right? The range, of course, is acting like a magnet. This range is no spring chicken, as they say. The range has been around the block a few times here. That range, of course, will continue to act as a magnet. Anytime we have a range-bound market, my job is to find resistance levels above the range and look for what we call buyer failure patterns to sell back into the range. My job is to find support levels below the range, right, and use seller failures to buy back up into the range. So it's a relatively simple plan when it comes to a range-bound market. Buy low at support levels below the range, sell high at, here's the kicker, at resistance levels above the range. We don't just buy low and sell high. We find support and resistance levels, right, to combine with the entry patterns. And my favorite setup, my favorite trade pattern or trade entry setup or entry trigger on a range market is to wait for a failure, right? I like to wait for the market to run up, right? Buyers will try to buy the pullback, and we sell into those stop losses going back into the range, right? The market runs lower. We wait for sellers to try to get short, and we buy it, back into the range, right? So it's a relatively easy strategy. We'll talk about breakouts here as well. Now, the key takeaways in this particular example of a trading range is, of course, we had this this bullish, V bottom from yesterday afternoon. We talked about this last night on the newsletter, right? We had that bullish momentum, and the goal last night was to try to find a way to get long, right, on the pullback, and we gave you guys some pretty good idea of where I was looking for the pullback. There was a hidden channel there, right, this morning. So that was a pretty easy. Hopefully you guys updated that channel, and right, you can see there that beautiful example of finding a support level below the range, buying off a support level below the range, using the range, right, as a magnet. Well, now you'll notice the buyers are running, right? The buyers have rotated, going higher now, and you'll notice, right, I've marked up the amount of the move we went below it to the amount of the move we went above it, and you'll notice that's exactly where we are. So we call this completing the pendulum swing or completing rotation, right? So if I kind of move these around a little bit, right? There's your pendulum swing. You can also see, too, the size of that leg up and the size of that leg up. Boy, that is either a big coincidence or that is exactly what they were trying to go for. So the moral of the story is the buyers definitely have the edge right now, but I think it's pretty easy to see we're at multiple levels of resistance above the range. So I'd like to get short, right? Go back into this range. What's my problem, though? My problem, of course, is we're bullish, right? We're pretty bullish here, right? It's a pretty strong bull market. In fact, we haven't seen really anything out of the bears here in about a day and a half now, right? Bears haven't been able to get anything going in the pullback, so we can definitely tell the buyers have control. In these situations, I'm at a level of resistance overhead, right? At a level of resistance, I want to use this range as a magnet. And I'll tell you, this is one of my favorite setups right now. And when we have these nice rotations off the lows like this, you'll notice get marked up as number 1 right there. What I'd like to do is I like to give the buyers, because we're so bullish right now, give the buyers one try, let them try twice. And I kind of drew this little channel out here, right? And that is where I'd love to look for an entry. So if I get it my way tomorrow, we get the buyers trying once already, lower low in price, buyers try again, right? I would love to use this here as what I call a nested failure, right? A nested failure pattern. It's basically a failure pattern, but because we're going against the momentum, I call it a nested failure because there's 2 of them, right? We use that number 2 quite a bit. Now, keep in mind, if this market was to go higher here, right? If it was to keep going higher here, we have even more resistance here overhead, right? You'll notice there's even more resistance there. There's no shortage of ways to short this thing off the high. Mark up the amount below, mark up the amount above. That area overhead is an area of resistance. There's also, and I know it seems like forever ago, right? But that weekend gap, which by the way, usually gets closed on Wednesday evening, it's not, right? So will Thursday be the lucky day to fill that gap and then come back down again? So these are areas of, again, resistance here overhead. So if the market was to pop higher again, we're not out of the woods here right now for these buyers. The buyers still have to worry about those sellers now, waiting for them to try once, waiting for them to try twice. Again, I always like to kind of draw those trend lines, right, off those lows, and then look for that short. But there's a lot of variations of this pattern. Again, I call these nested failures, and they're just simply my way of looking to sell short at resistance, but at the same time respecting the momentum, right, of the bulls. And so we're thinking about nested failure patterns, right, as the market goes higher to get short. Now, you might be wondering, well, when could I buy this thing as it goes higher? What would it take for me to be a buyer? Well, if I want to be a buyer up here, I first have to make sure I know where the buyers are trying to go. So I first want to make sure I kind of think about, okay, before I go trading a breakout, where does the market want to go? And then there are 2 basic breakout patterns I always like to look for. One of them would be a 1, 2, 3 breakout move. Okay, these are pretty easy, right? Pretty easy to see. They're usually pretty obvious. 1, 2, 3 into that new hidden channel. I look to buy the low of that hidden channel up there, right? Now, keep in mind on this one, we're going to really want to see a strong jump off the moving average, all right? It really doesn't matter to me how strong the jump up is. They have to be able to hold that pullback and go. If they can hold the pullback, then I'm confident, right, in that channel, and I want to do it obviously before we get to that measured move. Another breakout pattern. This is a more of an extreme situation here. Another breakout pattern would be, let's just say something happens overnight. The market just rips higher here for whatever reason. We see a shallow pullback to the moving average and a higher high. Again, before we get to that measured move, this we call a trap breakout or a two-try breakout pattern. Now remember, you always want to think about these types of setups, right, triggering off some area of support. So I'm always trying to find those hidden channels, as we call it, right? So, again, there are two breakout patterns I can look for as we go higher. So my focus, though, as we go higher here, will be trying to get short, right? Letting those buyers try twice with a failure pattern. And guys, failure patterns are my bread and butter when it comes to range-bound markets. And it looks like, at least for the time being, we're going to keep getting a bunch of ranges here in the year 2021. So if you want to get a deeper dive into these failure setups, all the details of the failure setups are covered in my free trading course. I would definitely recommend pause the video, grab that little pop-up that popped up there, and get registered. Get inside the members section of our video classes here. Get a great free course. You'll learn all my favorite setups, right? Failures, traps, pullback, strength. You'll also learn my 3-step strategy, and I'll send you lots of examples of how we apply patterns like these failure patterns or these breakout patterns to our favorite futures market. So again, doesn't look like these ranges are going anywhere anytime soon. So make sure you grab that free trading course, right? It's really a fantastic course, and what's better than free, right? That way the next time that we work together on this newsletter and I say nested failure, you're going to know exactly what the rules are, exactly what the pattern looks like, and what time frames I use to trigger the entry. Now, the next thing is, what if we run lower here, right? What if we run lower? Now, this is where, again, as I mentioned earlier, if we run lower, the ideal, what I'd like to see is get this channel coming over, right? And then get that short off the high there, right? So 1, 2, and then shorten off the high. What you got to be careful with, though, is let's say the market ends up tanking, right, and running lower like this. In that situation, I really don't want to get too aggressive getting short inside the range. Remember, the range is tricky. What you want to do in these situations, if it just kind of rolls over, is you want to think about traps, right, above those highs. Traps are going to be your best friend. Might have to do is find a little channel up there, a little trend line up there, right, and look for that trap. But trend line or no trend line, I really want to make sure if this market really kind of dumps and runs lower, I don't want to trade into this rising support trend line. I don't want to trade inside the range. So trap setup, this would be a bull trap, will definitely be your best bet to get short, assuming we don't just roll over and run. Right? Now, if we roll over and run, remember, we don't want to trade inside the range. If the market just simply rolls over and runs like this, where do you think these bears are trying to go? They're going to try to take out these lows down here, right? That's almost a given, right? Because at that point now, they will have completed their measured move, and now there'll be a big bullseye right on those lows, right? So there'll be a big bullseye there. If the market just rolls over and runs lower, all of that momentum, what does that momentum tell me? Usually that momentum means another leg is coming. And so to capitalize on that, I want to mark up those lows. I don't want to chase after it, right? I want to sell at resistance, and I'll be looking for a short off the high of that new hidden channel. Now be aware, usually these types of entries, right? These types of kind of reversals into that short, usually these are going to be, if you were to kind of zoom in on that area, usually these are going to be a combination setup. They're going to be what we call a failure into pullback combination. Now, I can't go into too much detail on those right now, but I cover these in the free course, like I mentioned earlier, right? So if you kind of zoom in on that little area right there, right, it's one of those failure into pullback combination setups as we head back lower. All right. So again, as we go lower, watch out for those traps okay, to avoid selling inside the range. If it really pukes, right, find those hidden channels, right, and get short off the high of those hidden channels, right? That should be a pretty easy plan there for tomorrow. And again, if the market runs up, I'm still looking for that short, right? One try, two try, and back down off of that high. What if we end up all the way back down here tomorrow? Can I buy down here? Can I buy the low of this range? Absolutely, I can. Just remember, though, what's the problem going to be? The problem is going to be what? Momentum. So remember how I want to sell up here, but I'm worried about the buyer's momentum? What do I do to sell short? Right? If I'm going to sell short at resistance above the range, but the bulls have all the momentum, what do? Let them try it once, let them try twice, right? So if we do that the same way on the other side, right? I'm at support below the range. I want to buy it back up, but what's my worry now? Momentum. So what do? We wait for the bears now to try once, right? Try twice, right? Find those trend line support, right, and buy it back up. There's a lot of variations, as we talked about earlier this week, right? Sometimes it really jumps and spikes up, and what you want to do is look for those traps. But it's the same idea, right? Same idea. You want to wait for those bears to try twice. That way, that kind of gets out of their system, because they're going to want to take this thing and keep it going, right? Because all of that momentum. So let them try once, let them try twice. Again, you don't want to trade right into that range, right? So you wouldn't want to use a real steep trend line there. If the trend line is really steep, look for a trap. If we come down and that trend line is relatively flat, right? Yeah, see, that's a great looking entry, right? That's an entry I can get excited about because you're buying nice and low. All right, guys? So we'll definitely go into more details of this in the video course I mentioned earlier, the patterns themselves, and I'm sure there are a couple things we missed here on this overview. So we'll fill in the blanks, of course, tomorrow in our trade room. Don't forget, 8 o'clock Eastern time in our trade room. In fact, don't forget, what I'll do is I'll put a link for the trade room session to be a member in the description of this YouTube video. So grab that. Get registered. Don't miss tomorrow morning at 8 o'clock Eastern time. How about some crude oil? Yeah, well, we talked about this last night, right? We were asking permission for the markets to short oil today, and we definitely got a beautiful setup. We had this range, of course. We had a bull market into a range. We had this pendulum swing, right? Amount below, amount above, and so we knew we were running into resistance. We had a level of resistance up there as well. So we knew as the market went higher, this is in last night's newsletter, we knew the market going higher, we knew that we would have some overhead resistance here. We knew that range below us would act as a magnet, and so the plan was pretty simple. I was looking for a 1, I was looking for a 2, and if you recall, right, what I said earlier or last in the newsletter was, if it really punches up, right, that's where you want to look for. Again, get those 1, get those 2s, draw that trend line, find that resistance, right, and short it off resistance. There was also a really nice trap in there as well. So that same nested failure pattern we just talked about on the S&P is exactly how the day began here on the oil. So again, range acts as a magnet. We are now rotating off the high of that trading range. I've got the amount of the move above the range projected down. That would be the bullseye for the bears. $52 a barrel is a very, very popular number right now. So we'll definitely be looking at that to be a magnet here for those sellers here tomorrow. The big clue on this right now, though, is the strength of this move lower. Right, look at the strength of that move, and it makes sense, right? Market went up once, up twice, right? They, of course, found those resistance areas and got short. So big push lower. So what do we expect with the big push lower? Well, we know the bears have momentum, right? We know that there's a big bullseye right on that low, so they're trying to get down there, and hopefully they'll keep it going right down to that pendulum swing. So momentum is all about the bears right now, right? The bears have momentum. Don't forget, we are also watching the rollover on this. Again, this is the 221 contract, right? So we're going to watch the volume to see which one wins tomorrow. Once we know which one has the most volume, we'll trade that one right tomorrow. So sellers definitely have the edge. We're looking for that pendulum swing, and you'll notice here I'm just kind of sitting right inside the middle, right, of this trading range. So I don't want to do much here. So what I'm going to do is I have to find a way to get short above the range, or right at resistance, or I have to get this thing to blow through these lows, right? Because I don't want to sell into these lows here right now, because that is what is kind of quote unquote the objective, right? The bears have that strong move down. They're going to want to get that low, and they may come right back up into that range. So you want to be thinking about two potential setups here. One being a continuation going lower, right, getting in before we get to that 5204. The other being this run higher and hopefully getting short off that high. So you'll notice I think this is a great looking chart here. I really like how that, let's see, get this tool to work. That trend line lines up beautifully with this channel, and that really gives us a nice sweet spot right there. I'll tell you, I wasn't convinced with this channel at first until I put the midline on. Look at the midline. The midline just fits like a glove. And I'll tell you if you look closely at these tops up here, there's that wick top, the closes above it. So I'll tell you, it's either a very good coincidence, or this channel is exactly what everyone is waiting for here tomorrow. So the big question is, right, can we get that pop up off of the high or up off the low, get outside the range, get up into resistance? And then once we get up into resistance, now what I can do is I can look for a buyer, right? Buyers to come in, try to buy that pullback. I can sell into stop losses with a straight up buyer failure. Then, of course, grab the pullback for a pullback setup. This, by the way, this is the same combination setup that I talked about on the S&P, right? If you zoomed in on that area. So this is one of my favorite setups in the trade room, right? A failure into a pullback combination. Now, you might be wondering, what if we really jam higher here, right? Can I still short that now? You can, but what's the problem now? The problem is not location. Location's great, right? Lots of resistance up overhead. What's the real problem? Momentum, right? Momentum is the big problem. If we push higher here, it wouldn't surprise me. OPEC is managing their production cuts right now. Stimulus stuff coming out for COVID-19. So I wouldn't be surprised of it. So if the market does run up here into these highs, can I short that? I definitely can, but you're going to want to try to use something like this. Right, you'll want to use that one, that two. Again, sell at resistance is your job, right? So as the market pops up, again, we don't want to get too aggressive, right? Look for those buyers. Try once, try twice, right? Maybe it's a trap high like that one was, right? Maybe it's not, right? Maybe it's one of these where it kind of goes sideways. And you grab that low there, you grab that low here, which you can see on gold in a second. Gold will be looking like this in a second too, right? There's your one, there's your two. So it's the same basic idea, right? Just, again, some patterns are different than others. But the goal is if it does run up and really, the ideal situation would be it takes out that 93 and then it pulls back. Buyers try once, buyers try twice. We find levels of resistance and we're shorting the sucker right back down into that trading range. So those are some ideas there as we go higher. Now the hard part is really going to be trying to buy this thing as it goes higher, because as it goes higher here, I'm not going to buy into that battle zone. And then we've got this very tight space up here between the trend line, the highs, and the top of that range. So it's going to be really difficult to thread that needle. The pattern that I would look for would be a move up, right? A move up, a shallow pullback, a move higher, and then before we get to the high of day there, it's a trap off of that low. Again, this is going to be. I'll be surprised if we see this, but this will be the pattern that you have to use to buy up here, right? You're not going to want to buy that pullback. No way, right? Buying that pullback is not going to be a very good idea because of where you are, right? If we get the higher high, though, we can hold off kind of the top of this trend line there. That'd be the best way to do it. Or, let's say some news comes out, the market jumps up, it holds the pullback. and it runs through those highs there, what is that called? It's called a 1, 2, 3 breakout pattern. Ultimately, it'd be 1, 2, 3 reversal here as well. And what do you do with those? Do we chase after it? No. We don't want to chase after it. We mark up the high, we mark up the low, and the first test is the best test, right? So we call these 1, 2, 3 breakouts, right? First test is the best test. Where do we think these buyers want to be going right now? Probably 55. 55 is the next big round number. That'll be an important milestone here if these buyers can get on their horse tomorrow. But again, as the market goes higher, I will definitely look to short this thing before I try to buy pullbacks here up into those highs. So of course, we're going to sit on the sidelines, right? Sit on hands, stay away from the middle. As the market runs lower, okay, this is where again we have to get enough momentum to really take out those lows. Just because we've got that support level right there, that was a strong move. We might sit there for a while, right, and then back up into that trading range. And we'll talk about the buy side here in a second. But what I would want to see here to get short down here is I'd want to see us go through that low. Now, this could be in the form of a 1, 2, 3. Mark that low, mark that high, getting short off the high. And remember, guys, when it comes to these 1, 2, 3, and again, 1, 2, 3 breakout patterns, we never know how far that pullback will go for us. I would expect it to go to that pendulum swing. But because the momentum coming off of that move is so strong, anytime we see a strong move in one direction, we expect to see another leg in the same direction, right? So we can usually get at least a first target, move that stop down to point of entry and try to see how far it'll go there. But that 52 is going to be a pretty easy target there. So we know that's an option. What might also be a good thing to keep in mind would be a strong move down. What's my concern? My concern is no longer momentum. My concern is location. And so because of that concern, I want to look for trap setups, right? Traps are always my go-to whenever I'm worried about selling low. So as the market runs lower, right, if we get that pullback, shallow pullback, that lower low, right, I'm not talking about a run lower here, but, it pushes lower, bears decide, you know what, I don't want to sell right into this pendulum swing, strong move down, shallow pullback, lower low in price, that high, right, that trap high. And remember, I'm always trying, right? I may not be able to find them every time, but I'm always trying, right, to find some sort of channel, right, to combine that off of, just because those really work really well when you combine them with traps, all right? And remember, these trap patterns, we cover all these trap patterns in the free trading course, right? Along with, I'll send you lots of examples of what they really look like on our favorite futures markets when you grab that link in the upper right-hand corner. So grab the free course in the upper right-hand corner. You'll definitely enjoy that free course. So how do I buy it as it goes lower? Right? Let's say we go down here. How would I buy this as it goes lower? Well, but what's my concern? My concern would be momentum, and my concern would be location, right? My concern would be momentum, first of all. And then my next concern would be location. So if we take out these lows, right, that'd be the bare minimum criteria for me on that, right? Again, I'm worried about momentum coming off the high, right? This rotation from above the high. So the sellers, they have control of this market. And I'm also worried about buying too close to the range, right? I don't want to buy inside the range. I want to buy underneath the range at what? At a support level. So if all we get is that bounce, again, this one may not be the easiest trade to take, but that will be pretty much the only reliable tool we could use to get in as the market moves back into that range here. And what you might see is, right, you might see it take out that low, come back up with a 1, come back up with a 2, right? Get that run higher, right? With your nested, right, two try failure for the bulls, we may go all the way back up here now, right, up into that sell zone overhead. Moving average comes over, and we hit it again, right? Buyer failure, pull back and back down again. There's no reason why we can't just play this thing back and forth, right? Buying low at support with failure patterns, selling high at resistance with failure patterns. Just remember, the strength of the momentum, the short-term momentum, is what determines which variation of that pattern setup we're going to use. And again, we'll talk a lot more about this. We'll do it together tomorrow morning in our trade room. If we end up all the way down at that 5204 area now, what's my concern? Yeah, we're very bearish. I like the idea of buying off of this, but if I was to go in and look for just your straight up failure pattern, right, like I would if the market was actually a bull market, what ends up happening a lot of times is the market will pop up. There'll be a trend line coming over, and you're walking right into that next leg lower, right? That happens quite a bit. So I'm not a big fan of trying to pick a bottom, right, on this. What I'd rather do is just you keep on using those again. And we're talking a lot about them right now because there's a lot of ranges and a lot of big, wide ranges, right? Not the actual range itself, but it's the sheer size of these ranges just means momentum is big. And, it's great because you can take a small risk for a nice big reward, right? The risk-reward ratio is great, but whenever you have a really big risk-reward ratio like that, you usually got to pay the bill, and the bill is in the form of momentum, right? The cost is momentum. So give the bears the benefit of the doubt. Let them try once. Let them try twice. Again, do we get that kind of flat, right? That flat trend line for the buy off of it, right? Or do we get that kind of grind up where it goes up like that? See, that's the trend line I don't want to take, right? This is just simply it's just too high up, right? Too high up. A lot of times what will happen is this will go up, come back, and just you wait. There'll be buyers waiting right below that low. Right, so I'm always trying to stay away from that as the market goes higher, trying to get in off that very high, right, very high nested failure. So as you can see, the slope of that trend line that I'm drawing, this trend line here, is a big factor in it. But the bottom line is once, twice for the bears. Let them try twice. Buy at support. And you're buying into those stop losses, right, as the market rallies back up higher. And again, you'll see a lot of examples of that in our free trading course there, right? That we can really master that setup with us in the course videos. All right, guys, looking pretty good there on the crude. I'm pretty excited for tomorrow on the oil. And then, of course, over on the gold. Should we wrap things up on the gold tonight? Wrapping things up here on the gold now. Gold is finally starting to come off these highs here this afternoon. But man, oh man, what a stingy market. It's because of this. It's because of the COVID plan that's coming out tomorrow from President-elect Biden here in the U.S., right? They're expecting some stimulus. And as you can imagine, right, what is good for stimulus is also good for the gold bugs, right? The buyers on gold, right? So if we get an announcement tomorrow regarding a big multi-trillion-dollar stimulus package, which is what it sounds like we're dealing with here, probably $3 or $4 trillion, that will definitely be a boon, right? A pop up, I would imagine, for the gold. So that's definitely probably what is keeping gold here a little bit quieter than we'd like it to be. What's the key takeaway here on the gold? Well, I don't want to sound like a broken record, but we got a trading range, right? There was that little Shetland range from last night. I was laughing today when I got back to my desk, and that little range up there, I thought that was funny from last night. Hope you guys enjoyed the jokes last night. But we got the range, right? And of course, what do we do at a range, right? We buy at support levels below the range. We sell at resistance levels above the range. How do we do it? We focus on failures, right? We wait for the market to go up. We wait for the buyers to try, and we sell back down, right? We had talked about this in last night's newsletter where, right, we wanted to find some resistance areas up overhead. I was disappointed we didn't get the test of that trend line. So, sometimes you get them, sometimes you don't. So we're back inside the middle of the range now, right? We're back inside the middle of the range. The bears are rotating now off the high, right? So we got some good momentum coming in for the bears right now. The bears would love to get back down to those lows, right? Take out some of those lows down there at 18, 20 and change. I want to avoid the middle of this range, obviously. Bears have control, and this should look very familiar here. We go up, we make the high. That was the high of day today, believe it or not. We pull back, the buyers try once, right? We're now going lower, we're back inside the range. So as you can see, this is a great looking chance here as long as they can give us a pullback here, as long as they can pull back here right now and not go lower, right? Because if they take it lower, you know what's going to happen, right? That channel now is going to be a little bit too tight, right? I really don't want to trade inside the range because, well, you tend to get good strong moves into the range, but you know, as we always say, right? Ranges are where good trades go to die, right? They're, you know, good setups will die inside of ranges. So I really don't want to take that one right there. What I would like to do though is draw that trend line off those lows up around that high. I've got this kind of lower high trend line there. So my sweet spot is really right up in there. And what I'd like to do is if I can zoom in a bit closer, now you guys kind of have the lay of the land here. What I'd like to do is get this thing just like this one right here, really, right? We go up, buyers try and collapse back down. Again, I'm not a big fan of trying to pick the top. So if the buyers can pop up again, right, get up into this sell zone here, I'd like to get us coming back to the moving average, get these buyers trying to buy this thing, right, take out those highs, and hopefully they do, because if they do, now we know exactly where their stops are, and we can just simply get short right into those stop losses, right? We're going to use the range as the magnet, and of course, we'll use the buyer's stop losses as fuel, right? Market goes up, buyers are going to buy the pullback, stops are sitting below those lows, the range is the magnet, right? Range is the magnet, and we're selling into those, right, into those stop losses. All right. So if the market goes higher here, that's what I would love to get. A nice failure pattern, nice juicy failure pattern off the resistance trend line to go short. As the market goes higher too, I mean, there's nothing wrong with buying this thing, but I'm not going to buy a break. I'm not going to buy the breakout. I got to wait for the breakout. Now there is this big juicy range up overhead at 1880. You know, we'll call it 1880 here, just for illustration purposes here right now. So again, with the COVID plan hopefully coming tomorrow, right? We may see this market jump up, hold the pullback, and make a strong run higher. That makes our job pretty easy, right? Because then we just mark up the high, we mark up that low, and we like to look for the first test. First test is always the best test. And again, if you were to zoom in on that little area right there, right? You got your channel there on a faster time frame, it's usually going to be those failure patterns into pullback combination setups, right? Will usually end up below the moving average as it comes over like that, right? So kind of think about it that way. I know my drawing skills aren't that great, but you know, hopefully you can kind of tell what I'm trying to get at here. Again, we'll kind of plug in any holes here tomorrow morning in the trade room, but that's the idea. If we do get that 1, 2, 3 breakout pattern, and we can go higher. Again, though, remember, we're not trying to buy that first pullback. The first pullback has not worked yet. Another scenario would be if the market just simply grinds higher here, if it really runs on some strength. You know, if we see some headline news come out, the markets really blast higher, that's the time when you look for those, right, those 2-try breakouts. Don't chase after it. Look for that trap, right? The hard part about a strong move like that is by the time you see it, right, it's just gone too far. The pullback is nice, but a lot of times the pullback like this one won't actually pull back to the moving average, right? So when it does pull back, nobody blinks, they hit it, right? So I love that breakout pattern, again called the 2-try breakout pattern as we go higher. So I think we've got that all covered for the upside. I want to stay out of the middle. Okay, I know this is a pretty wide range right now, so we want to stay out of the middle. As we go lower here, where do we think the bears are trying to go? They're going to try to make it down to that 1820, 1817 area. So if the market runs lower, let's just say, for example, we can definitely ride this momentum because we are rotating right off the high. So as we run lower, if the market just simply wants to keep on, you know, grinding lower here, right, I wouldn't have any problem with that 2-try trap right there. You know, if the market wants to keep going, I'm not going to chase after it. That's for sure, because we're down around the low of that range. But if I can get a strong push lower, a shallow pullback, a lower low in price, right, a little trap high, that'll be a great setup. That'll be a great trade to take. And honestly, it probably won't even matter where it is. You know, as I would like to get it obviously before we get down to that low. But, if we have enough momentum on it, though, there's a good chance they're going to finish off that pendulum swing with that trap, right, as we go. If they were to hold the pullback here and go lower, then I would simply mark up that low, mark up that high, and the first test is the best test, right? So shorten that sucker. Again, the goal would be getting into it before we get down to that low. And then if we do end up all the way down to that low, right, what would I be looking for down here? It doesn't seem likely, but it may keep on bleeding. You got 1800, right? Big round number down. There's not a lot else until we get into that 67. So 67.2. There's your 1800 though, right there. So 1800 would be an easy magnet for those shorts. We got, again, support levels down here. So as we run down to the low of that range, this is exactly the situation where you've got to be careful with momentum. If you're trying to be a buyer on it, wait for the bears trying once, wait for the bears trying twice. We've talked about this pattern setup quite a bit already, but you can see it's the same basic idea. This is how trading works, right? We're not making up new setups every day based upon the weather today, right? We have a pretty darn consistent plan we follow every morning in the trade room. It's going to be a failure pattern, but because that momentum is going to be a problem, we use that nested failure, right, as we go. We may also see something like this. These do happen, of course, relatively frequently, where the market may puke going lower, and then we may see kind of like that 1, 2, 3 run. In these scenarios, we can definitely look for that to be another reversal, right? And obviously not on the slow time frame, but a faster time frame, we can get off that first pullback. It's the same idea, right? It's a 1, 2, 3 reversal pattern off of that low. Again, I'm not going to pick the bottom of this thing. It's crazy, right? And I'm definitely not going to try to pick the first pullback, right? As much as I would love to pick the bottom on that, it's just very unlikely to do that. It's like going to Vegas, right? You can get lucky 1 or 2 times at the slot machine, but you sit there every day, you're not going to get lucky every single day. You better have some skill, right? And that's, of course, what day trading is all about, too. You'll get lucky picking bottoms every once in a while, but if you plan on making this a career, getting lucky every day should not be part of the business plan, as we say. So we like to wait for that turn in momentum, right, and then get that long, right, off of those lows. All right, guys. So avoid the middle. I would love to ride this momentum going lower here. My big question right now is, do we get that pop and that short back down? Does the market roll over and we're riding that momentum lower? Time will tell. We'll know more here in a couple hours. Now, tomorrow morning, don't forget, we're going to be together tomorrow morning and every morning, 8 o'clock Eastern time. Joining the trade room is really easy. I'll put all the information you guys need in the description of this YouTube video. If you're on the blog right now at sidewaysmarkets.com, our trading blog, you'll find a big button to get started tomorrow morning right below this video. So either grab the link in the description or hit that big button below me here tonight and come out and see us tomorrow morning in our trade room. Don't forget, if you have any questions whatsoever, you can drop those questions in the comment section below. You can call that toll-free phone number. Don't let my ugly mug scare you away. We got live chat on the left. We got live chat on the right, and we're always standing by here to answer all your questions. So thanks so much for tuning in. Hope you learned something here this evening. I'm really excited for tomorrow's trading session, and I'm hoping to see you there with us at the opening bell. So make sure you join up as a new advanced member. Come out and register for the trade room tomorrow morning. If not, make sure you grab that free trading course as part of our free trial, and you can learn all my favorite setups in the free course as well. As always, my name is Joseph. Be well out there. Be nice to each other, will you? Stay healthy, stay happy, and be here next time. Adios, amigos. Bye-bye for now.